You've probably seen it. Someone tracks every single penny they earn on a spreadsheet, yet their bank account is always empty. Or maybe you know the opposite, a person who hoards every dollar, terrified to spend, with their life savings draining away into a bucket of anxiety. We are taught that managing money is a rigid math problem. The logic is simple. If you memorize the right formulas and follow the rules, the outcome is guaranteed. But math alone cannot explain how a highly educated financial executive from Harvard could wind up entirely bankrupt and crushed by debt. And it doesn't explain how a rural gas station janitor with zero formal financial education could quietly pass away with an $8 million fortune. Raw intelligence and elite education are no match for simple, long-term patience. Financial success reflects the quality of your behavior, not the complexity of your spreadsheets. Beneath every financial decision you make runs a hidden operating system known as a money script. This invisible code constantly overrides your surface-level logic and logic-based plans. You didn't consciously write this code. It was programmed into your mind during childhood, shaped by the financial environment and emotional experiences you absorbed as a kid. Every time you make an irrational choice with your money today, you are simply executing a subconscious rule that was written decades ago. This financial DNA forms at the micro level. It is built from the dinner table arguments over bills you overheard, your parents' quiet anxieties, and your earliest observations of who had power and who didn't. But it is also shaped by the macroeconomy. Growing up during an era of significant economic instability wires the brain to prioritize aggressive protection and basic survival over future growth. Compare that to a brain wired during a massive economic expansion. This split-screen chart illustrates the difference. On the left, a volatile market line tracing the pain of a recession. On the right, the smooth, rising curve of a decade-long boom. Someone raised on the right naturally views the market as a safe, reliable tool for multiplication. Because every generation only lives through a tiny, specific sliver of global history, they construct entirely different mental models of how money actually works. When people do seemingly wild things with their paychecks, they aren't acting crazy. They are acting perfectly logically based on their own specific, limited historical programming. One of the most common programs running in the background is the money worshiper script. This usually stems from a childhood belief that acquiring more money is the same thing as acquiring safety and self-worth. In adulthood, this script traps people in a cycle of lifestyle creep. They constantly buy liabilities, like expensive clothes or luxury gadgets, and mistake them for assets because they need to signal their status to the world. This leads to the man in the car paradox. Think about the last time you saw a bright red Ferrari cruise down the street. You probably didn't look at the driver and feel deep respect for them. Instead, you projected yourself into the driver's seat, imagining the admiration you assume that car automatically commands for whoever sits behind the wheel. Spending money to physically show people how much money you have is the fastest mathematical way to ensure you actually have less of it. Then there is the money avoider script. This code is often written in childhood households where cash was scarce or a primary source of conflict and stress. In adulthood, this manifests as the sunk cost trap. This behavioral chart illustrates loss aversion. The downward spike for a $100 loss is twice as deep as the upward bump for a $100 gain. The brain is wired to feel the pain of losing much more severely than the joy of winning. This is why the avoider refuses to cut their losses on a failing investment. To their internal programming, clicking sell means confirming a personal failure, so they hold on until the value bleeds to zero. The alternate extreme is the hyper-saver, who refuses to invest at all. They keep their cash stagnant, believing that absolute protection is the only financial goal that matters. Saving protects your money, but only growth can buy your freedom. The avoider script traps people in a feeling of safety at the direct expense of their future independence. Recognizing these inherited, subconscious scripts is the prerequisite to rewriting your financial DNA. No matter how much your salary increases, it is impossible to out-earn a bad script. Traditional financial advice often ignores this. It demands perfectly rational, emotionless decision-making, treating humans like calculators. But a perfectly rational spreadsheet strategy will inevitably fail when tested against the visceral human terror of a real-world market crash. The alternative is striving to be reasonable instead of rational. This means building a slightly flawed but durable system that accounts for your own psychological triggers, panic points, and moments of fear. A decent financial plan that you can actually stick to during terrifying economic times is superior to a mathematically perfect plan that you abandon the moment things get rough. To make that durable plan work, you have to separate being rich from being wealthy. Being rich is defined by your current spending. Being wealthy is defined by your invisible assets. Wealth is the money intentionally not spent. It is the luxury items declined and the lifestyle upgrades passed on in favor of keeping your capital working for you. The only way to protect that wealth is by defining exactly what enough looks like. Bernie Madoff had hundreds of millions of dollars, yet lacked an enough point. He risked it all for money he didn't need, losing his freedom. Identifying your enough point changes your relationship with your bank account. Your savings stop being a fund for future consumption and start becoming a freedom fund, a cushion that gives you the power to say no to a toxic job or a career you hate. A moment of wonder. This accumulated freedom eventually buys something that no luxury product can match. It secures your ability to wake up on a Tuesday morning and decide exactly how you will spend your day, effectively buying back your most precious, non-renewable resource, your time.